Now, before you're gonna hear this today's call, I'll just like you guys to quickly take out your notebook and a pen, and that's just because this call is gonna focus on 5 major topics I talked to everybody in my server about. This is why it's completely raw. It's a complete raw conversation with me and my server members of essentially the 5 principles that has taken me to where I'm currently at. Now, these 5 principles I've discussed essentially is the 5 things I base everything from trading to actually learning on. And so if I was to restart trading, these 5 things was to be the 5 things I would actually focus on going into the markets, learning. Because if you just understand these 5 things, which is also why I ended up recording this call and showcasing it while I more or less focused on possible trading setup. And that's just because these are the 5 most important things in my methodology. So let's just dive right into them so you guys know what to annotate and what to listen out for. Now, what are 5 different topics I am to discuss in this conversation, and you will hear in this conversation, is the individual markets themselves. All of them is just a reflection of data getting printed. Now, these 5 different individual core principles I adhere to is number 1, understanding that every single little thing you're seeing in the markets is just information. It's just pure data. The candlesticks you're seeing getting printed, etc., is just information. The assets you're trading on, that's just pure information, pure neutral information. Cannot tell you anything directly, yet it tells you every single thing at the same time. Now, the second thing, and that is that every single little concepts you can learn, be it ICT, be it the GEX, be it order flow, be it, whatever, the DOM, etc., or TPO or whatever, right? All of those things are just concepts designed to make you understand the information you're seeing, be it the candlesticks, etc. And the third thing being that none of these concepts is actually gonna make you profitable. Learning ICT, learning an ICT model, learning an ICT strategy is not gonna make you profitable all of a sudden. It's not gonna enable you to hit TPs, etc. As previously said in the number 2 topic, it will just help you identify information on the charts. And that goes for order flow as well. It will not directly translate into you becoming profitable. So then, why is the number 4th topic and why is the number 4th major thing? Data collection is what actually makes you profitable. How individual concepts or the concepts you yourself develop will only get you so far. It will only help you interpret information. However, it will not make you automatically profitable. For you to make these concepts or your own concepts profitable, or your own model profitable for that case, you need to dissect the individual concepts, and you need to actually look at when those things work, why those things work, and understand them to its core physics principles. And the only choice you have to do this is through data collection, back testing, forward testing, or just strategy testing through Pine Code, which I personally do. Now, the 5th and the last concept, which pretty much goes over each and all things, which essentially answers all your given questions, and that is, without data you are no one. Without data you are a nobody. And that's just because without data you don't know how to act in different situations. You will not know how your model work. And in this call and conversation, you'll hear me more or less go through a trade or a trading session of Nasdaq, and in that I'll pretty much answer questions I get from these people in my Discord asking me these different things. And these are the 5 principles I adhere to answering all of those individualistic concepts. And you'll also hear me give direct examples of how I actually interpret this different session and what I'm looking for. And all of those things is just purely based on these 5 principles. You can see I more or less collect data on each and all things, be it my individualistic execution models for example, executing on my bigger process, my first, second, and third underlying dynamics. These are the execution models on these financial instruments. You can see I collect data for example, CFDs, futures, but I also collect data on my in-depth analysis, in-depth bias, like you can see right here. And so what I've decided to do is actually give you guys a data collector, which you guys can yourself start collecting data on and start dissecting these concepts you're learning, be it order flow, etc, etc. And I've uploaded this in my Discord. So if you just go into my Discord and just scroll down all the way, you can see if you just scroll down all the way to essentially data collector, clicking on this and then clicking on this, here you have all the instructions, and then you can just duplicate this and save it as your own and start doing and adhering to these 5 principles. Hopefully you guys like this call. Let's just dive right into it. It's so good. Look at this liquidity here, this right here, that's the liquidity. So it's looking very good, this setup right here. We'll just see if we get the reversal, but we're going through a 1 hour level, as the students can see. We I think touched that right now. So now we're just waiting for somewhat of a reaction here. Now I'm just gonna look at the other sort of screen here, see what we're doing, see what we're up against. Yeah, so now we're just waiting for a 5-minute algo lock-in. The people who knows who know, like the people which knows, all right? So that's what we're waiting for, 5-minute algo lock-in. That's literally it. And then we're gonna take a setup here. I was nearly gonna execute on the previous one, but you know, we could even go deeper. But like, you know, it's very good because, you know, we can go all the way as you know, we can go all the way to like here before I start thinking about that we're gonna go to this final level. So we have level here. If you look at it more or less fundamentally, and if you look at the levels we have a level here, right here, somewhere between here. And we also have the final level. Remember this is the where we look at the most possible reversal. But then we have also gone to this level, which we felt I was nearly gonna execute here. I did not do that, however, which of course this was just pure luck that I didn't execute. But I'll annotate this sort of as a setup either way, because this was like a setup which failed. So it's good to get that annotations in. And here, yeah, exactly. Oh, but bro, you know, you should not exactly, you know, you can look at that way as well, but nevertheless it's nearly the same setup. I think I remember one time where something similar happened, and it's just gonna quickly snap back if we were actually in fact bullish, which I believe we are currently, since we've seen extreme fear. Let's actually look at that right now. So we have somewhat of a time here. We can just quickly go in and look at the fear and greed index. Fear and greed index. And we'll see essentially. I think we're at an extreme fear right now. Oh no, now we're out of fear again. So I'm just gonna show you guys this as well. Yeah, here we have it. So you can see we are out of fear. We previously, you can see, now we went into more fear, but you can see like just today we went into like another extreme low. So you can see we have like a fear divergence, you could say. So this is like a real SMT as well. I'm not gonna lie, it is. So here we had the bottom of Nasdaq. If you look at Nasdaq, this was the bottom, you know, we're currently, you know, seeing on Nasdaq. And then we have gone even lower here. So this is like a fear SMT. No, it's not an SMT at all, but you can see it that way. It works in similar fashion. You know, it should be real imbalance here, in opposite manner, because fear, you know, works in liquidations, etc, etc. Because look, this takes into consideration, yes, I know it's CNN, but it takes into consideration junk bond demand, safe haven demand, market volatility, and call and put options in a very simple manner. And so you can see a lot of people are getting liquidated here, and so that's why I'm using this. So I'm not using it as like fear and greed. I'm using it as more liquidation, because when you're extreme fear, that's usually when you see a lot of people gotten liquidated. I mean, it's just confirming for you that yes, in fact, a lot of liquidity has gotten taken. So now we have even further, you know, liquidity getting taken here. Look, under this low. And so I'm not worried. If we go under this, then we have one final level somewhere in between here. I'm gonna actually annotate that. Right here it is. I think that's gonna pop up. Yes, that is. I just did it on my other computer. So right here you had an exact level. This is a 50-minute level. As the students can see here was the 1 hour level. And let's see where the next 4 hour level is. Next 4 hour level is down here. So that's the next 4 hour level right here. Let's see where we have the 1 hour level. Another 1 hour level. We have more or less one right here. But I'm still looking at this. So this is the 1 hour level. We can just write this. Since I'm waiting for like an outlocking of this. So let's actually annotate the text. Can we do text on this? Yeah, we can. So let's do just 1 hour here. Since it's pretty good to have this. And then here, 50 minutes. Then we have this one as well. So then I know, because if we go down here, I want us to go over this, terminus, and then here I'm gonna enter some longs. If we break this as well, if we break this level, then I'm gonna do something like this, and target this right there. Potentially do like a swing, but I cannot do a swing on this, but maybe I'll do on a CFD account or something like that. Swing up here, if this actually in fact happens. Otherwise, if it continues and we don't see any reactions here, we're gonna wait for this one right here, and then we're finally gonna go for this, and then we're gonna wait for this. So see, I don't just execute. I'm not an enigma. You can see I don't do like this and go long here. Rather, I just use these levels as more or less like breaks, you could say. So I see this as an extreme low. If we're bullish, in fact, it's an extreme low. Otherwise, this is an extreme high. So you see, like now I'm focusing on just extreme lows, but it differentiates. So sometimes I focus on extreme lows, sometimes I focus on extreme highs. Now, since I'm bullish, I'm focusing on extreme lows, and so I'm seeing this as a low, and I see us as us reaching up higher. And especially when we go down like this steep, this fast, it's usually like an indication of a fast reversal like this. So hopefully we see something. You can see fast down and then extreme low because we're bullish. So we'll see. And what is happening in the stock market? Let's just look at this. So Tesla down for the day. I thought it was gonna open bullish, but it did not do that. Now we're in that 50-minute level. I'm seeing Google open down. Palantir even more down today. So I guess Michael Burry was not correct on this one, but I guess he exits now. He uses y'all as exit liquidity if you actually exit at this. Apple somewhat consolidated. It's not doing anything special. Nvidia moving down. This is probably why the stock market is going down. It's semiconductor led, so you want to keep an eye on what the semis is doing. It's looking like it's down for today. Did not see any gap open, right? No, so it just chopped around, open at the similar place as yesterday, and just gone down. Yeah, so it looks like the whole stock market, if you do like this, let's see if we can just do an heat map of the whole stock market. Let's see, I'll just pull that shit up as well. Of S&P 500. Let's see like if we see any and how much they're down. So technology looks like everything is down for today. Consumer, everything is down. Healthcare, some, and then the rest of them. But the consumer and technology is what really matters. So do we have any extreme level here for those? Let's see, Nvidia, for example. Let's see if we are approaching any extreme level. No, does not look like it. Nearest extreme level is right there, guys. Right there, you have one. Right there. That's an extreme low. And I don't think we're going to reach that. So that means that we might go further down for Nasdaq. A little bit further down. We'll see. But you can see, like, looks like we went down to this. Now we'll see if we get an algo lock in here. So now we're just waiting for break here, and then break here, and then entry, stop loss, targets. That's what we're holding. So we'll see if that works out. And by the way, this is not signals. I'm just showing you what I'm thinking, what I'm doing, how I'm preparing myself for sort of this possible setup. I'm looking for something like, as I showed you, like a break of this, fast break of this, entry somewhere here. If we just break this with one, I'm gonna show you. It's gonna pop up in 1 second. So like this, for example, you can see right here, popped up right now. I'm sorry for that. So you can see I'm looking for like up, down, right here, break of this, very strong break, which we are seeing currently right there. Break of this, here entry, and then take profit right there. But it could also just snap up, like go crazy. And that's what we usually do. So you see, if we see this 5-minute close, so bullish like this, that's perfect. That's great. And no, if you're wondering, am I concerned about these equal lows? No, I'm not, because I think we've taken enough liquidity, shown by fear and greed, shown also by institutions buying like that through dark pools, and for 20-day rolling day positions has gone up. That's what more or less shows me bullish, bearish, long term, intermediate term, and not long term, intermediate term, by the way. But then I need to get this confirmed. So you can see it's much more about flows and sentiment rather than me going through fundamentals for this. For here, it's a lot about fundamentals for foreign exchange rates. It's all about fundamentals. But for indice markets, it's more, what does retailers think? What does institutional people think? So it's more about thoughts rather than real facts. So it's all about sentiments, etc., etc. But we'll see. Looks like it might fail. You can see it was not real a close here. So you can see, you could say, like, you could realistically say I trade support and resistance now. Not gonna lie. So maybe you hate it, maybe you like it. This is how I trade. It works real great. But this is not how the charts looks. It does not look like this clean. On my other thing, it looks a little bit more in depth. So you're not seeing all the information here, but you're seeing some annotations like this 50-minute level, 1 hour level, etc., etc. And this is not levels like enigma levels or whatever. These are just based on where we should not be, or where we should be for very little time if price in fact is bullish. So if price is bullish, we should just be at these levels for a very short period of time, since it's an extreme low if we're bullish. Euro low of the month is in. Yes, I agree, bro. I agree. I've been watching. I can just send you guys this right now. Send you guys this right here. So if anybody's interested in like my analysis, how I get levels, etc., etc., please be active in public analysis. That's where I post all my analysis. So if you go into like this public analysis, I sent this. So range bound, mild upside, DXY likely stabilizes around 99 to 100, supported by stabilizing inflation. IMS, this is my inflation measurement score, and neutral policy. So this is more quantitative analysis. So quantitative analysis, and not qualitative, not technicals, not fundamentals. This is pure numbers. And neutral policy, capped by labor cooling. This is the labor heat index. Sentiment contrarian, you don't know what labor heat index, or this is just my way of quantifying different numbers. Sentiment contrarian signals suggest short covering, potential push towards the upper ranges. This was sent Monday, I guess. And you can see we went up to like 100, and then now we're just here, and now we're finally dropping, right? So that's good. This is good. I also had a level right here somewhere. Yeah, also right here. That's another level. So now I'm just watching if we are in fact break another. So I have like different levels, different extreme lows, etc., etc. Now it looks like we are breaking the 50-minute level on Nasdaq. So that's good. So now we might be able to potentially take a setup soon. But if we break, then we're bearish. If not, the students is the only one which will notice. So you can see, looks like we're breaking the 50-minute level here. Looks like we're seeing a reversal. So that's good. We're watching this close, and then we might go in and take something. You use volatility surface? No, I don't use these things. I might use them, but like I don't. You need to know what you need to know, right? And I don't need to look at those things, if I may say so. I know what I need to look at when the time comes. So personally, I don't overcomplicate, if you may say so. So, do you look at hedging demand? No, it's no, no, no. I don't look at those things which become popular right now. So I don't look at any gex or anything like that. Yeah, I use it. I use it. I look at it. Yes, but do I use it every single day? No, I use it when it's important. I use it when more or less I need to use it. But you should not use these enigmatic things. Okay, don't focus on things which is becoming popular, etc., etc. Focus on creating just a profitable system. And I think I explained this to, I don't know who I explained this to yesterday, but I think I said like, yeah, you should. Oh yes, bro, it was you. Yeah. So I think I said you should just understand, because if you want to become profitable, the way you become profitable is not by learning the things which become popular or the things which anyone else is showing you, etc., etc. Um, so it's not by getting more information or getting other information or moving or switching strategies. Rather, what you just need to understand is you need to understand why an asset is valued where it's valued, like what is driving price. And now we're not talking about retail things, because this is what overall institutions think about as well. They think about why is the asset valued here, like why are we here currently, right? And so you need to just understand why we're here currently, like at price. Why is price moving like this? Why are we dropping? If you just understand those things, you will of course also have a higher potential chance of predicting where price will go, because you have a predictive advantage of knowing if these things might change in the future. So yeah, see, it's super simple. All you need to know is not focusing on what everybody else is thinking or what everybody else is using. If you understand why price is moving the way it does, why price is where it is, you will also start to, because then you understand why price is the way it is, like why price is dropping here for Nasdaq, etc., etc. And you can go in and look at these things because you understand, like I said, why price is moving the way it is. And yeah, so then you can go in and look at the things of importance when they are important, because not anything at once is equally as important. There's different things which is important at different times. So yeah, so that's essentially it, I would personally say. So yeah, so you can see no break, did not see a break. If we had a break here, it would have a higher probability of us going up higher. Does the probabilities diminish now? Yes, because we should not be here for long period of time if this in fact is an extreme low. So yeah, we'll see what ends up happening. What is your long-term bias on EU for the next 2 months? I've gone through this so many times, but I'm very, very, extremely bullish on USD and extremely bearish on dollar strength. All right, so that's why that's my bias for the next 2 months. Potentially we have a high here for dollar strength. Potentially we have an low here for euro. We will see. But you know, anything can happen at the end of the day. So that's my predictions. But I'm not making money on those predictions. That's just what I'm thinking. Yeah, maybe, I don't know. Maybe it will. Maybe it will not. I don't know. But I think so. I think so too. Um. Yeah, and that's just because like I think the probabilities right now, like this is why Nasdaq is dropping. If you're wondering, like what I've said previously is that you need to understand like why Nasdaq is dropping, why we're moving the way we are, and why people are fearing, etc., etc. And it's a combination of things. So you learned the things from Kiwi. Oh man, he's too enigmatic. He's a goat, but I don't like people which thinks that you can predict the markets. Not gonna lie, I'm not that guy. I believe the market is 100% random. All right, 100% random. So anything can happen, bro. It's all about probabilities at the end of the day. Not gonna lie. If you want to have a retail mindset, by the way, so this goes for anyone else. I was actually making a video on this, but the biggest retail mindset, okay, if you want to be a real retail trader, what you should think, all right, is that the market is predictable, because that's what all retail traders think. Okay, they think that you can predict every single little candle. There is some sort of strategy which makes you not prone to any losses at all, and that you more or less can predict every single little thing. That's what retail trader thinks. Now, if you want to think more actually like institutions, because institutions does not think that markets is 100% predictable. Rather, they see it's more probabilities around probabilities. So that's essentially what I would personally say. If you want to think that, that's essentially how I think. I try to, I've been personally you know one thought as well that the market is 100% predictable, but it's crazy actually when you realize you're such a fool. When you realize you're such a fool, and I've just come to accept that yes, the market is 100% random. There's just some places where markets is less random, but nevertheless, you can never be 100% certain that anything can happen. All right. Some things is just more probable than others in some places. But for example, if we continue dropping, like let's say below this low, then I would say I don't really have an idea where the markets will go. Okay, I have different levels, but I cannot say how the candles will print between this and this level. And similarly goes, below, because I had like, as you saw today, I had like 3 or 4 other levels here. I could not predict which one of these levels would work. Now these levels have statistics behind them, so I know that they have different chances of working. But and I can show you it as well, in fact. But I cannot show. I cannot. What is it? Yeah, let me just show you guys right here, so you can see this is the probabilities of each and all levels working right here. So you can see this has like, what is this? Mean. This is -2, so 73.76% chance of working. So that's this level, as you can see right there. So that's what we're waiting for, not gonna lie. So like it could still fail, but I'm working with probabilities on probabilities in probabilities, you could say. So that's all I'm doing. So now we're just waiting. We'll see if it closes here, and we'll see what the next candle does as well. Since look, we need to break above 2 levels because they're not inverse, right? And I'm not gonna take anything if we're under those levels. I'm only gonna take if we're over. Because look, now we can just simply go like this. Bam, and this is gonna be a short. So it's better to just wait for all these scenarios. What do you think? What GEX is? Well, GEX is gamma exposure, right? You're just checking what the market maker says hedging, which does not really show you anything. Like, look, if people think it's some kind of enigmatic thing, and what I mean by enigmatic is that it predicts the markets. Nothing predicts the markets. That's what you gotta realize. Nothing predicts the markets. I don't predict the markets. I don't know how the candle will print. That's why I'm waiting here, literally. I just know that some things is more probable than others. Now, does a GEX help you to identify certain things? Yes, at certain times a GEX can help you, right? Or gamma exposure can help you, but not right now. Like I would not say, it's not anything special. It's like COT. It's like seasonalities. It's like these things. It's still does not tell you how candles will print. Still does not tell you the next sort of, does not tell you like things to 100% certainty. So, you should not go with the flow. You should not look like and trade what you think looks cool. And instead, you should just develop your own concepts and base them. I have these 5 principles. I'm gonna make a video on this as well, because y'all are getting like majority of you guys. Now I'm not gonna pretty much tell you that every single little one of you guys tested ES with your levels. Yes, I've tested every single one of them, because now I've more or less um, you know you can create strategies with them, right? Strategies on TradingView and test them, and that's what I'm doing with all the things I'm currently working, right? So I'm always testing everything. Now I've done it so it's automatic. So I see the probabilities, and the probabilities updates each and every day. So that's great actually. You saw them in the top right corner, but yeah, so it's perfect. My levels is nothing else. Like, look, it's not levels, okay? It just shows extreme lows, extreme highs. So it's not levels, right? It's super wrong of saying levels. It just shows you extreme highs, extreme lows. Because look, if you're bullish, right, you should only be, because look, it's like a way of describing where average price should be, right? Average price should be around the average price, right? 97% of candles printed is around the average standard deviation of candles, right? But when you go to the outer edges, okay, when you go to the outer edges, those are only there for 7% of the time we're trading in the markets, right? And so we should only be there for a very short period of time. So that's why my levels work. So AMT in some sort. Yes, everything is AMT. Everything in the markets is AMT. Everything is AMT, bro. So you're correct. AMT is a correct theory. I don't know. I don't know. See, this is random. I don't know. We'll see if we take longs. We'll see if we close above this. But then we have something I call algo locking right here. You see, this is the 15. This is the 1 hour. If we trade both, then we're golden. But look, now normally I would entered, right? Normally here I would have already entered right there or something like that, and then I would gone break even. But through data, okay, I now know that it's better to wait, be patient, a little bit more patient if I'm manually trading, and then execute if we see candle closure above this as well. I'm just gonna check one thing. Yeah, that looks good. Oh, looks very good. Yeah, we're just waiting. So it might be like a 1-2-3 trade, because I'm gonna have a big stop loss on this. I'm gonna have like something like this, I guess. Yeah, so it's gonna be like this. But like you're saying, Voss, everything is AMT, I would say. I don't care about people. People can trade whatever, right? So I'm not gonna say anything about ICT or anything like that. You could still call me an ICT trader, by the way. So like for real, for real. I have nothing to say. You could trade whatever, all right? It's not about concepts. It's about data. It's about just understanding that, you know, anything can happen in the markets. You cannot predict anything. No, I'm not. Yeah, bro, I'm still ICT's biggest glacier, you could say. Definitely. No, but I've never really traded ICT in the first place. I've never used. I've always traded the strategy I'm doing right now in front of you guys as eyes. So you see, oh, I'm using a fair value gap here, right? But not really. Just looks like it. But every single concept work, okay? Every single little concepts work. but you know, you just gotta make them work. I would say either you say every single concept work, if you make them work, or I would say no concept work, because literally, no concepts really work. No, I don't think ICT is profitable. If not, like otherwise he would show proof, definitely, definitely. But I believe it's. I don't really focus on like, look, if you ask me, well, do I think ICT is profitable? I don't really know, and I don't really care, to be honest. To be honest, he can do his own thing. I'll just do my own thing. Everybody does my own thing. That's why I'm not really on social media anymore as well. I'm just quite chilling. I'm not, talking to anybody else on social media. I don't have any sort of trading influencer contacts. I'm just for real, just doing my own thing now, fully. So it's very great, very great. I've moved past all that bullshit. It's a lot of things. And no, I'm not in. I'm not in. I need to wait a little bit more. I need to wait for a little bit more confirmation, right? And then I can even go in with a smaller stop loss if I get the confirmation, because then we're gonna have the terminus moving up. So the terminus is all the way moving up. Like if I take the trade like executed right here, you can see I would not have gotten a good RR. Now, as I said, we need to break this as well. And then if we break this, like look, we're forming a low potential here. So say if we form a low like this, and then move up here, and then move back in here, then I can have a stop loss like this, you could say. And if you enter like somewhere in between here, like I used to enter like as soon as we broke above like an algo locking, I call this, I would have been break even, and then I would have potentially gotten break even here, and or I would have bottomed it. But usually when I bottom, I take like losses, because then I would have a loss already here. I would have already entered right there, and I would have already entered right there. I used to be such an TikTok bottom taker. Could you tell yourself starting trading from the start? What would you tell yourself to study from the? I would say, look at the markets. Don't go to social media. Don't try to copy anyone else. Like don't try to trade what looks cool. Instead, just look at the markets and try to figure out when and around things which might look interesting, right? So I would just go on to the charts, not gonna lie, and this is how everybody develops their own concepts in the beginning. Look at the markets and understand how the markets really work. Now that's a starting point, because if you think the markets is like algorithmically controlled or whatever, and it's predictable, you're gonna get nowhere. You're gonna be, stuck where you're at currently, right? You're not gonna become a better trader, because ultimately there's always gonna be something wrong. If the markets is 100% predictable, if you take a loss as well. Yeah, I would do exactly the same thing as I did. Yeah, like, so yeah, I would not change anything. So I would just go on to the markets, understand that the markets is not predictable, it's random, but at some places it's less random than other places. Um, because look, if you are training with a mindset of that the market, that there is some sort of enigma out there, that the markets is not just standard deviation probabilities, etc., etc. You are always going to go into markets looking for something which is predictable. Okay, and if it's not predictable, meaning if you take a loss, it's always going to be, let's say, your own fault. There's always going to be fault. And so you're going to, rather than focus on the whole setup, focus on the individual trades, and your psychology is going to get fucked up, and not going to be able to trade good, because you're always going to do something wrong, and you're always going to search for an edge. So you're like always going to a little bit change your model, because you're going to see like the gex, you're going to see something like order flow, you're going to see something like, oh, ICT pulse model or whatever, and they're going to look into that and see, oh wow, he trades like this. And most of the time, like these influencers which promotes their own models, like they say this model is pretty damn good, right? And it looks like it's pretty damn good because they want you to look into their model, because of course that's how they get views, etc., etc. That's how they basically trap you in like a constant of thinking that's your fault, that there is something which will make you like automatically profitable if you start trading it. And that's not really the case. Nothing will make you automatically profitable when trading it. So rather than just looking into other concepts, I would understand just basic market movement. Not basic market movement in a sense of, well, markets is moving up and down, uptrend, downtrend. Not that. I would understand, why is a Nasdaq actually this high? Why is it going higher? Why is it going lower? Like fundamentals, okay? And not just fundamentals, okay? And in a sense, just understand, what is actually, Nasdaq, because like a lot of ICT traders, or not just basic ICT traders, but even like order flow traders, does not even know what, the fundamentals of Nasdaq is, like, and they don't even know what fundamentals mean, because fundamentals is a very broad term. So that's what I would start focusing on, because it's much better to understand that it's not predictable, and rather you should just focus on the areas where you think the markets is more predictable than it's not predictable, you could say. So some areas is just better to be stationed at, right? Like this area right here. So now if we were to, for example, break above this, well, then the markets, I would say, has an higher chance of continuing higher than continuing lower, right? But since we did not break this, nothing changed, so I cannot really predict the markets here. But if we break this, I can start predicting the markets, because then I have statistics on my side. So yeah, there's a lot of things you need to just understand, etc., etc. And don't be caught in trying to go into these enigmatic concepts, because then you're never gonna get out of it. And the sooner you realize the things I've said, the faster you will start actually developing a real model based on physics principles. Something I forgot to say. So, like real knowledge. So, develop a model on real knowledge rather than fake knowledge, rather than something that does not exist and something you is biased into believing exists. And what I mean by that is like, you believe it works because you've seen it once or twice, but there's not really any, like, you cannot say like, why shouldn't fair value gap work? Like, is there any explanation behind like why a fair value gap should work? Not really. There's not any good fundamental, proof of why a fair value gap actually should work. The only ICT concept, which I would say actually sort of has, framework behind it, an established framework, because it's not really ICT which started using, sweeps or sweeps of liquidity or rates, whatever. But that's liquidity sweeps, right? That's, something which definitely has some sort of fundamental backing behind it, because that's also verifiable, right? Not verifiable in a way you can test it, but then you'll have a variance 50-50, right? So you're not gonna have an edge alone with an liquidity sweep, but then from there you can start building upon it. So I only use things which has, an steady framework behind it, and I only got there by collecting data in the first place. So that's also one of my principles. I have 5 principles, by the way. So first principle, you should actually take notes of the 5 principles I use to understand the markets. So first one is understanding that everything in the markets is just data. It does not really tell you anything. It just gives you information, but it does not tell you where the market should go. So that's like principle number 1. Principle number 2, all concepts is just ways of interpreting information, okay? To get you to better understand and interpret the information on the charts. So it does not really, tell you where the markets will go. It just helps you interpret how the market moves, etc., etc. Third is just understand that no concepts is profitable, and that, like I said, they just give you an understanding of markets, okay, which you then can use, which is number 4, which you then can use through data to make them profitable. So that's number 4. Data is key to interpret the information, because if you have a lot of concepts, you have a lot of information, you have a lot of ways of interpreting that information. How do you get out of the noise? Like, how do you cancel out the noise? And how do you leave the thing which actually have framework behind it, the things which, if you break down to physics principles, actually has, let's say, actual information, actual facts, actual backing of why they should work. And that's through data, okay? And just the 5th thing, which is the most important thing, is without data, you are nobody. You are a nobody. I am a nobody. Without statistics behind every single thing I'm looking at in the markets, I am a nobody. Because now I would have taken 2 losses here, guessing, okay? If I was trading the same model, I would have taken, 2 losses here, okay? So I would have probably lost and funded account here on these just 2 trades, because I trade with quite high risk, okay? But just because I have data, I now know how to act on, trading manually the model, okay? And I also now know which sort of, I don't know how the candles will print here. And that's also something I understand through data, because I know the market is random. So see, this is like, why are your thoughts on gold? I don't care. I don't know. I think it's just enigmatic concepts. I hate enigmatic concepts. I hate concepts which has no real backing. Okay, there is no enigma. There is no algorithm controlling the markets. Where and how did you learn the code to code the algo lock-in? Well, I just created it. I just created it. Super simple. I created it through that I used previously. It's on my YouTube, etc., etc. I've also used standard deviation and liquidity, plus something I call external alignment. External alignment is just fundamental, so it's just fundamental backing with standard deviation and liquidity sweep. That's literally my model. And then I've, through data, improved upon that. And then through improving that, because I needed a way to prove that, statistically, they also have statistics behind them, etc., etc. And then I coded it because I needed to make it into, statistically backtesting it throughout history. And then I've done it, and then I came up with this because, it's hard to manually do some things. So I've done everything in automatic. So now all the indicators I use is, created by me. Everything is created by me. Yeah. So if you just click in here and see all the concepts right here, except this COT data, but I could easily make this, but you can see macro, spreads, all of them just created by me. But I don't like enigmatic things. I don't like things that says, oh, this is how you predict the algorithm. This is how you predict the markets. 100% accuracy, 90% accuracy. I would say no real model has a over an 60% win rate. I'd say 60% is max. You cannot get 80 or 90. Of course, high frequency tradings or trading firm, of course, they have 100, but they're not trading the way you're doing. They're not executing orders. They're executing orders faster than the market's print. So that's why they make money, because they're also based on physics, but they're based on light speed things actually. So they're actually using laws of physics to have a 100% win rate, which is, they're literally knowing what price will be faster than you because they're closer to the exchanges, right? And they can just price in the inefficiencies through arbitrage, right? Statistical arbitrage. And so that's what they're doing. And so they have 100% win rate, but they don't know what the markets will do. Like if they, let's say, if you were equally as close as they are to the exchange, and you will get data as fast as them, and if everybody was equally as close, there would be no HFT firms. But since everybody, there is an imbalance, right? So they know it, but it's just because you and some other institutions is very far away from the HFT firms, right? But if you were equally as close as they are to the exchanges, then you would have no problem, because they cannot predict what will happen. They cannot predict what will happen. But they just price in imbalances which exist there simply because other people are further away from the exchanges than them, because they literally know the future, just a little bit of milliseconds in the future. But if everybody, like I said, was equally as closed, because there's a limit of speed of light, right? So everybody gets information, and some things, if you're further away from exchanges, you get information a little bit slower, since the speed of light has a limit, right? You cannot go faster than speed of light, so they're using physics and laws of physics to their advantage. That's how HFT firms work. And if you think they're controlling the markets, HFT, or what is it, quant firms, they're doing exactly the same thing as you. They're trading as well. They don't know. Okay, they don't have any sort of major advantage over you. Maybe they have some fundamental advantage where they get information just a little bit faster than you, and potentially they use their own data collection, so they have their own people doing the same thing as the BLS, etc., etc. So they maybe have similar people, so they maybe have um, like measuring some goods and services, etc., etc., so they can get CPI, but it's not going to be the same CPI as the BLS does, because nevertheless the services and goods the BLS measures changes. So they don't have any advantage if they're not insider trading, which of course many of them are as well. But even insider trading is uncertain. So nothing is 100%. Like, what I'm trying to say here is that the people who say that there is some people out there, there's some person which can 100% know what the future holds. They're stupid. They're stupid. No one can predict the future. All right? If you find a person which can predict the future, please bring him to me. All right? And then I'm going to make a shit ton of money. But no, you cannot predict the future. And I'm telling you that you can say whatever you want or believe whatever you want, but as faster as you learn that we're all on the same playing field, more or less. Some are smarter, some are better suited for trading than other people, but we're nearly all people here at the same playing field. And what you really should be searching for is the real things, the things with backing, rather than the enigmatic things. And the faster you understand that, the faster you also become profitable. So that's just all I have to say. That's all I have to say. If you have a model, does it have to work as much historical data possible, 5-year backtest? So no, don't backtest it. Don't manually test it. Literally what you should do is create a strategy. You can create a strategy here. If you go to Pine Editor right here, and you can copy paste a strategy, and you can go through all of history with it. That's what I would do. And if you have a discretionary model, or a model where you have a little bit of discretion, I would say try to make it as mechanical as possible. Now, I'm not using an fully mechanical model. Like, I'm using a mechanical technical model, but I'm using qualitative information to get the bias, etc., etc. But I'm trying to minimize how much qualitative analysis I do and maximize the amount of quantitative confirmation I have. But I'm never ever gonna be able to predict it. Like, yeah, so even if I max out, you can see here, like, look, as well, what I talked about. You can see we did not break this, so here I would take a loss. But the number one most important thing is data collection. And now I mean not just programmatically test the model and then leave it. You should collect trades on each and every setup. Here, for example, I'll actually collect a loss right there, even if I did not take it, because this was one of my models. So I can learn not from one, but from the whole thing. From the whole thing. And I'm actually today gonna publish a new data collector for you guys, a little bit better. Okay, because I was gonna make a YouTube video talking about sort of the 5 principles I have for becoming profitable, but I might as well just upload this little conversation for you guys. So yeah, we'll see. Anybody else have any questions? We'll cover some more questions, because it looks like now we're gonna take this low and go into this level here. Let's actually see. This is still a valid level here. Oh, it's actually a little bit above here. Whoa, we have a very good level here, by the way, guys. Very good level here. very good level here. I'm gonna show you later, but they are very freaking good, and I'm quite happy, that even if I did not take a setup today, I'm very happy that we actually went lower, because this just gives me even more room to trade towards the upside later. And how, if you're wondering how I trade all-time highs, I'm just trading similar as I'm doing right now. Just that it's easier if you have, because then you can take some massive swings and have some massive easily targets, because markets is 80% going to all-time highs. So when we're having these dips, these are major advantage for me as well. So I know it's a little bit hard to trade all-time highs, because when we're like at all-time highs, we usually like go up like crazy. But I usually trade like these dips as well. So I wait for these dips, like here, for example, like this setup here. I'm gonna show you, and then I trade them. And then when we're like trading at an all-time highs like this trending, then I have a model called TP. So then I use the TP model. But I'm gonna show you that setup I took. Let's see if I can just show you it, so you guys can just be able to watch that. Yeah, but I think it is quite an advantage when having these dips, and to predict dips I have different ways of doing that, but I'm just gonna show you the setup here I took. Yeah, right here. Let's see. I'm sorry it takes a little bit of a while, guys, but I have two different ones, so I can just show you this one, sending that to you right here. This was this one right here. This was this win right there. That was that. And then I have another one where I took from this low to this high right there. So I'm just gonna send that as well. Yeah, by the way, here you have the level as well. So yeah, I know it's not a full bottom tick, but here you have the full bottom tick, by the way. So there you have the full bottom tick of this one. And here you have the probability. So I use probabilities, a lot of probabilities for all my setups. I go back, look at probabilities, historical analogies, etc., etc. I'm not going to show you how I get the probabilities, however. That's private, but this is the setup here from there. I took right there. You can see the level right there. You can see the gap right there. And then you can see this was 24304. As you, like, everybody just go into the VC and just click in on this. You see 24304. That was the level I was looking for. 24304. Let's just go back in time and just gonna show you that. Okay. Come on. Yeah, now let me. So I took 304. Yeah, like this. This is 305, but it's like a little bit lower than this. So you can see I took it from here, and then I targeted. What did I target? I think I targeted. Yeah, I targeted this high. Yeah, I targeted this high. So you can see it worked out pretty great, and then you can see I took this one as well. That was the one over. So if you just scroll up a little bit, you can see I more or less bottom take this one as well. And you can see this is how I trade. So you can see I trade levels. That's it. I only use levels, liquidity and levels, and then probabilities through historical analogies, more or less. So that's what I use. So I'm watching something similar here, right, with these two levels. But you can see I failed two levels here, so I don't just straight away enter on the levels. Sometimes I do, but it's not very often. So you see, it's not enigmatic. I cannot predict the markets, but I can say that this level has. Well, let's actually look how much statistics this level has of playing out, and I can say that with pretty confidence, and I'm just gonna send the probabilities for you guys as well. So this has like an, what is it? Wow, that's a quite high probability of working out. It has a 79.59% probability, and this is in accordance to 98 trades, and 78 of them has worked previously. I'm just gonna send you the table, and then we approaching another one where we have like 80% probability of reversing. So that's crazy. That's crazy actually. I'm just gonna send you that as well in the chat. see if I have Discord here. Yeah, so right here you can see this is the 331 or the second one. So you can see the second has like 90 or 78 79, I'm sorry, dot 90 or dot 59. Sorry for messing this up, but that's the probabilities behind the level, sort of. So that's what I'm looking for. Yeah, any questions? Just deliver me some questions here. We'll see. I'm just gonna do like 2 more questions, so please do. And then I'm gonna finish off because you see the levels, right? You see the 25102 and you see the 24947. So you can have these annotated. How do you code chart levels? Well, I just code them. It's super simple. I'm not gonna go in detail about how I code them. It's just code, right? It's just code. It's simple as that. It's just coding them. You use Pine, right? You use the native TradingView language. You use the native TradingView code language. So just search on YouTube, how do I learn to Pine code? Like, how do I learn to code indicators on TradingView? Just search that. On YouTube. On YouTube. So then you'll find a lot of videos. I can send you one. I can send you one. Yeah, you can hire, but it's very easy to trade nowadays, you know. It's very easy to trade nowadays. You'll be very surprised, okay, how easy it is. It's not difficult at all, okay? It's not difficult at all. Here you have a video. This is straight from TradingView. This is TradingView tutorial. It's very basic stuff, okay? You can search up most of the things, and then you can just essentially make it very manual. So you can then change a lot of things in the indicator, in the just setting tab. So in this, just go in and change a lot of things in this. So you can, it's very simple. It's very simple. And look, it's like this code is like 10 lines, not the big one, because I have different versions. You can see it took me like 1 year to code this. Took me like 1 year to code this, because look, before I had standard deviations manually like this. You know how standard deviation is from like mean price. So I did like standard deviation from like average price, like this, for example, and I got these levels. But then, you know, it was very unreliable to go back and test this, and I needed a better way to test this. And so I just coded it. So now it's fully coded. And it's much better. It's much more reliable. It's much better. I get statistics, I get probabilities behind each and every level from 1 hour, 5 minutes to 1 minute. It's very fast. It's very easy. So I'll definitely learn how to code. Okay, it's not that hard, and it's not necessary even. You don't need to know how to code, but you know, I don't even know how to code. I'm not gonna lie, but it's very easy. You learn it very fast. That's what I'm saying. That's what I'm saying. One more question, and then I'll just round this call off. So we'll see if we get another question here. I guess not. Anyways, then guys, you have the levels. You have pretty much seen me, you know, go over a possible setup here. It's not sad that it did not work out. It's just a little bit, you know, it's actually better when we have this low as well. Does Topstack has max days? Yes, you can only have one open for 1 day. Then it closes automatically at the end of the trading day. So yeah, that's very sad. So it closes automatically at the end of the trading day. Thank you all so much, guys, and I'll see you all. Bye, guys.